Yes guys, how are you doing? So welcome to Super Trades Academy. Today we shall be starting our mentorship officially 2023. So guys, choosing Super Trades Academy is the best option you have done and you will not regret. We shall make sure that we give you all the services needed in order to conquer the financial markets. Basically, we have two strategies, that is smart money concept. If at all there are some members who want to learn smart money concept, we shall also be having some studies. Some members, they texted me and they told me that they have problems in English, so I decided to redo, like to do the course again when we are going very slow, so that all the members can understand. So we shall start with the basics, but our strategy, what I'll be teaching on, that is supply and demand, SND, and we shall talk about fib level, and we shall talk about AO, our some oscillator, and we shall talk about SNR, support and resistance. We talk about dominant, break. So basically these are the things that I always look at when I'm entering the trade. But if I start away from these things, some of you will not understand. So I want to start from the beginning till when we reach there. So what I ask you guys, you have to be patient. First of all, you have to be patient. You have to be patient, guys. Don't look on my profits, don't look on the money I make right now, because you will be disappointed. Don't rush. It took me years. I've been in field for, like, now I've knocked 5 years. So don't look on my profits. You'll also make that profit with time. You have to test, you have to back test, you have to practice, Don't rush to enter trades. The markets are not going anywhere. Forex trading is there always. So don't rush. The market are always there waiting for you. Let us study very slow. Let us go very slow, so that each and every person will understand. At start, I wanted to do this mentorship for 3 months, but it will depend whether I will do it for the whole year, or we go till lifetime. What I mean is sending you setups and teaching, but the community will be there always and always. So guys, first of all, supply and demand in depth. We have to take note that any trade taken in supply and demand has to be a complete setup. I trade small accounts, going small accounts, because I wait for a complete setup. I don't trade every day. I'm in this signal group of mine. Some members can text me that, why are you not sending signals, and I send signals, and those signals that I send, I don't trade them because they put me on pressure. I can trade like for 2 days, I can trade 3 days. So I only trade when I see the setup. So supply and demand, you have to make sure that everything is complete, the setup is complete. You only trade a complete setup when all clues are in place. Take an example. If you're going to wait for awesome oscillator, you're going to wait for QM, you're going to wait for maximum point level, you have to wait for everything to be in place in order to place a trade. So you have to note that thing, guys. Secondly, here I've read that the only way you can keep winning in forex trade, in financial market, is to backtest and practice. If you backtest and practice, it can give you confidence, and you'll be trading like you're reading books. So you have to practice and back test in order to keep winning in financial markets. I hope you have understood this, guys. So let us go to our first chapter. I don't know if I'm rushing or I'm going slow. So our first chapter, we are having the trends. You cannot trade financial markets when you don't know what is a trend. So we are having basically two major types of trends. We are having the uptrend, which market is making higher highs, higher lows, and you're having lower trend, where the market is making lower lows and lower highs. When the market is going high, that means you'll be looking to buy from the fresh demand zone. And when the market is going down, that means you'll be looking to sell on the fresh supply zone. So basically, this is the uptrend. Uptrend, some people call it bullish, but in supply and demand, we call it rally. That's why you always hear me saying rally, base, rally. And this is downtrend. Some people call it bearish, but in supply and demand, we call it drop. Guys, you have to know that for me, I don't use indicators. We don't use indicators. All indicators are lagging indicators. But by the time I started trading financial markets, I used indicators. Overbought, oversold, and all those stuff. Ichimoku. You know all those indicators, guys. They don't work. They can work for some people. There are a lot of my friends who are making money from indicators, but basically for me, I don't trust in indicators. They are all lagging indicators, all those so-called moving averages and all those stuff. So I only trade price action. Those indicators, they made me lose a lot of money. I lost a lot of money that you have not yet lost. I may say that you have not yet lost, or some of you have lost the money. You understand, guys? I lost over $5,000 trading financial markets before I get experienced. I learned from many mentors, and I invested a lot of money. So some people were texting me and they said that I'm scared. I paid for mentorship $100. I did not get the what? I did not get the service. For me, I paid all over 5 mentors when I'm being scammed. You get that point, guys? So you have to risk your money in order to get what you want. So what I was telling you here, guys, we are having uptrend and downtrend. So this is the uptrend. Whenever the market is making its move up, it is called rally. Buyers are empowering the market. So whenever the market is going up, that is called uptrend. And here, whenever the market is going down, that is called downtrend, and it's called drop in supply and demand. That's why you say drop, base, drop. And where you sell from here, this fresh supply zone. So you're expecting the market to come back here and go back. So the question is when and where to enter the market from this zone. So let us continue, guys. So in chapter 2, we are going to study about the price movement. So you're having 3 kinds of price movement. You're having uptrend, which is rally. We are having downtrend, which is drop. And you're having base. Some people call it ranging markets, and some people call it sideways. But in supply and demand, we call it base. Why? Because you can find a ranging market on smaller time frame, and on the bigger time frame it is a demand or supply zone. For example, if this is M15, this is M15 and the market is going down, it can make some ranging here and it continue going down. So this you may call it a sideways, but for us we call it base, because if you go on H4, you can find that this is drop and there is a bullish candlestick, drop, base, drop. So you expect the market to come back here. So we can't call this one a ranging market because there's a bullish candlestick. This call it a supply zone. On smaller time frame, you can find it as a ranging market. So saying all that, guys, here we are having the four market moves. In supply and demand trading, we are having 4 market moves. So the other 3 major type of movement, which is uptrend, downtrend, and ranging market, we get 4 market moves from the 3 market moves. So what are the 4 market moves? We are having rally, base, rally. We are having drop, base, rally. We are having drop, base, drop, and you're having rally, base, drop. So here, this is a supply zone. You'll be looking, this is the demand zone. You'll be waiting for the market to come back here. This is what they call rally, base, rally, and here drop, base, drop, and here this is drop, base, rally, drop, base, rally, and this is drop, base, drop, and this is rally, rally, base, drop. So these are 4 kinds of movements as you see them here, guys. This is rally, base, rally, and this is drop, base, drop. This is drop, base, rally. This is rally, base, drop. I wrote everything here. I wrote these things for those ones who cannot understand English. So I gave you an example of each and everything here. When rally, base, rally happens, you'll be looking to buy from demand zone, and when drop, base, drop happens, you'll be looking to buy from supply zone when the market comes back. And when drop, base, rally, you'll be looking to buy from this demand zone. There are confirmations that you must be looking for here before you buy. That's why most traders, they fail. What are the confirmations? When the market is coming back here, lower lows, lower highs, it can create a 2M buy. This is lower low, higher high, and you have to buy from this zone, 2M buy. Or it can make divergence when this one is going down and also months later the market is going up. So there are confirmations you have to look for here before placing a buy, which we are going to see. And there are also confirmations that you must wait here before selling that we are going to look at. So let us see, how does it look on chart? Those 4 kinds of movements, how do they look on charts? Here we are having rally, base, rally. So this is the rally, base, rally. So this is the candlestick that makes a base that you don't see. This one here, drop, base, drop, drop, base, drop. This is the candlestick that makes a drop. Then drop, base, rally. This is the candlestick, bullish engulfing. This is the indecision candle that you have to buy from when the market comes back. So this is the bullish engulfing. You have to buy from this zone. You're going to talk about bullish engulfing. Guys, this is basic. So we're going to enter in my strategy very soon. For those ones who don't want these things, you can go straight to the strategy. If you can say that here you're wasting time. So this is rally, base, rally. This is the bearish engulfing. We have to sell from this candlestick. We are going to talk about engulfings. So guys, we are continuing on chapter 3. I don't know if I'm going very fast or you're understanding. If you don't understand anything, please ask me. You have paid your money. If you not understand anything, please ask me. So here we are having zones. So let us see what are zones. There are three zones that we are going to look for in our trends. We're having the upper zone, we have the mid zone, and you're having the lower zone. These are the three kinds of zone. Upper zone, that means the market is going up, you're going to sell from here. Mid zone, going up, down, you're going to sell from this zone. Lower zone, the market is going down, you're going to sell from this zone. So those are three kinds of zones we are having, and those three kinds of zone, you are going to see them right down here. We are having, this is the upper zone, which is also called top zone. This is called mid zone, and this is called a lower zone. These ones, they are all profitable. I trade them all, but the mainly tradable zone, this is the upper zone, top zone, and the lower zone. That's why I place trades and I hold them to make a lot of money. So for example, if I'm trading this upper zone, I hold the trade till this lower zone. If I'm trading on the lower zone, I hold the trade till this upper zone. But if you're selling from this mid zone, sometimes you can be selling and the market go all the way up or change the direction. So these are three types of zone we are having. So guys, let us continue and we see if the market is going down, what are the zones. This is the top zones. Remember, this market was going up, and this market is going down, Where are the zones when the market is going down? I don't normally sell or buy from this one. As I told you, I sell from this zone, which is called premium supply in smart money concept. So that's why this one is very, very, very profitable. Why? Because you can find there that you aim, sell, higher high, lower lows, and you sell from this zone. And here you can find a supply zone, drop per stop. This is called maximum point level. You're going to talk about this one, why we sell from this one. That means you're having a lot of confirmation. You're having 2M sell, you're having maximum point level, you're also having a supply zone. So let us see, guys, how to mark the zones. How are we going to mark the zones before placing our trade? So here is a very challenging part, how you should mark your zones. First of all, this is how we mark zones whenever we find that the perfect zone the perfect setup to place our trade. So having a standard marking. Standard marking, you mark when you find these candlesticks are found in the market. You're going to find to look for them in the market, and you find them. So this is the standard marking here, where we're having bearish engulfing. You mark pull until the second candle. You mark from the wick to the higher wick, same as bearish engulfing, from the wick to the lower wick. So you'll be selling from this zone right here and be buying from this zone. This is how you mark the zone. So another type of zone, we are having long wick. These candlesticks are found in the market. If you find a candlestick, opposite candlestick is long, that means you're going to mark from the body to the wick. Make sure that whenever you mark, you have to mark to this wick, and you put your stop loss fewer pips, like 10 to 15 pips above that zone. Same goes here. So we also have this marking, guys. Some people, they mark from here up to here, but for us in supply and demand, you are going to mark the whole candlestick and we're going to mark the whole this candlestick. So pull until the second candle, as how we said here. Mark from the first candle's low, this candle's low, and here we have to mark from the first candle high. Mark from the first candle's high here to the second candle's low. This second candle low, and this is the second candle high. So also same goes here. This also a marking. You have to find the things in the chart because they are there. Bearish when you're going to sell. Mark from the first candle's close here. This is also a long wick, and you also to mark, don't mark the whole candle. This will be a bad risk to reward. You'll be risking a lot of money. You have to mark from the body to the wick. Basically, if you can mark everything, you can mark from the body to the wick. And here you're going to risk like 25 pips, and here you add 5 pips, that is 30 pips. You can get a reward of like 90 pips, 90, 120, 150. So guys, let us start from chapter 4 in the next part.